What's going on, everybody? Welcome to my channel if you guys are new. If you guys have seen some of my videos, welcome back and I hope you enjoy the video. In today's video, we are going to go over the basic rules over technical analysis, and the method that I trade is using no indicators besides this blue 21-day EMA, and we're only going to be focusing on the bars printing on the chart, which is known as price action trading. These rules that I'm about to show you work because there are thousands, basically millions of other traders who have been using this same method for years and years and years. And once there's a confluence of trend lines and trend channels and similar techniques that people use, setups appear on the chart that everybody can see, and those setups are very, very high probability. And in the case of the way that I trade, I scalp S&P 500 futures, which is what we are going to look at today. Scalping means that I trade looking for only a 1-point movement in the underlying instrument. Yet, the method that I'm going to teach works for crypto, stocks, forex, futures, whatever it may be. And let's just get into the video by doing a chart lesson by going bar by bar so you guys can know what I'm talking about. The first main rule that we have to abide by is the trend line rule. So we see that there's a trend working up here, an obvious trend, and the rules with trends are that once there's a break of trend and a new test on an extreme, that's when we can tell that it is over, or at least there can be some reason to start looking for a reversal. So what do I mean by that? We see that there's an uptrend here. We have a break, one leg to a new extreme, or an attempt to a new extreme, and then we have another leg until we finally get this high, and then what happens? We start reversing in the other direction, which is what we expect. So now when we start looking at a trend in the other direction, we just draw our trend once again. We have this nicely fitting trend channel. We always want to draw our trend channels to fit the most bars as possible with the most touches. As we see, this is very nice and neat. If we had drawn something like this, that would not have been very wise because there's only one touch here, another touch, and then we had a break, and then on the lower side we only had one touch. If we have our trend channel like this, it follows the trend line rules that every price action trader follows. So we have a break, one leg to a new low, and another leg to a new low. One leg right here, another leg right there. And then once that happens, we expect to either reverse or have some congestion, as we see here, which is known as a trading range. And in these trading ranges, we want to buy at the lows and sell at the highs, which is slightly counterintuitive if you think about it, but if you think about it a little more, it makes sense. All the people who buy at the top of the trading ranges are the beginner traders who don't know what they're doing, and all the institutions, all the smart traders, all the professional ones are selling at the tops and buying at the lows because these are levels of resistance and support. Now we see that following this congestion, we have a strong leg up followed by another strong leg up. So now we can see that a wider trend is valid. Something like this still doesn't have many touches, so we can also draw our trend from the highs and see if that fits a little nicer. And in my opinion, that looks a lot better, simply because the more touches means the more accurate our trend channel is going to be. Here we have a nice touch here, another one, a slight break, but then here we see the trend continues to be followed. Now, we can also see that because there was a slight break here, that led to one leg up to a new high, and another leg where we didn't quite match the same momentum, but what happened after those 2 legs to a new high? We started reversing in the other direction, which is once again expected. We can also see that within this trend, we see another trend like so, and the price action rules are followed once again. We have a break, 2 legs to a new high, and then we reversed. So really, we don't even need that. A lot of traders focus on these wide trend lines and channels that don't really work, and in moves that you really want to focus on finding the high probability setups, you have to focus on these short-term trend lines so you can allow for the language of the charts to show itself, and we see that the price action rules are followed. The price action rules are always going to be followed, if not exactly. That means that your trend channels or trend lines are incorrect. So once we had a break of that strong move up, we see that we're just going below the EMA, above the EMA, below the EMA, but we are in a slight downtrend because we're making higher highs or lower highs and lower lows. Now in this case, we see that we break to the downside, signaling that there was an overshoot of the trend, and that just means that there's even more selling pressure than we initially thought, and our trend channel might even be something wider, and we actually need to draw a continuation of the trend that even became steeper, because what we might have had is just a congestion like so before finally resuming a trend in the downward direction. And we had a break, a couple legs to a new low before we had more congestion and then ended the day. Now let's get into the more nuanced techniques to spot the different trades. And the technique that I use to identify these trades is known as the two-legged pullback, first entry shorts, second entry shorts, second entry longs, and I'll show you what I mean by that right now. So we have this uptrend, we have a break, and no new high yet if we're looking at the chart live like this. Now, we do have a break and a test at the EMA, and we actually broke below the EMA. So once we see this bearish looking bar right there, all of the traders who are selling before we have a test at this new high are going to get trapped if the next bar breaks above this one. Also, we have a short-term trend line right here. We have our first break. We have a micro attempt at a new low, and then a nice bullish bar. The market likes to work in pairs of twos, and the two-legged pullback pattern is a tried and true tested method that works very, very, very high probability if you're going to scalp for 1 point, which is what I do. So in this case, we see that we're going to go long 1 tick above this signal bar if you're using a market order, or 1 tick below if you're going to try to sneak in with a limit order and get a little better price. But all we're looking for is a 1 point move. So that's from here, as we see on the right side, 713, 3713 to 3714. And this trade actually ended up working out for much more than that. We went all the way to almost 3730. So that was a 17-point move, and we're only looking for 1 point scalp. But once you get these 1 point scalps, you can also have runners on top of those, which you can check out on a couple of my other videos, and those can make you even more profits if you catch a nice move like this. But we see that we have a new high here, we have 1 leg down, and we have a first entry long right there. We have a break, and then if the next bar breaks above this one, we have a second entry long or a second pullback, because here's the first leg, and then we have a mini second leg before reversing again and resuming the trend. And now at this point, we see that we have a break and a new high, so we can start at least thinking that trend might reverse, and we can look for second entry shorts or two-legged pullbacks now in the short direction. But in this case, we had a break and a new low, so we want to be wary of going short because the trend can be over, and we want to wait for this congestion to play itself out. We can also look for trades in there. You can check out a couple of my other videos if you want to learn how to trade ranges. But in today's video, we're mainly going to focus on the two-legged pullback, which we see right here. So if we're trading live right here, we see that there's a strong trend up. We finally broke out of this trading range. We have one leg down here. We have a first entry long. And then all in the same bar, we have another leg down because the bar on the right side broke below the one previous to it. And in this case, we see that there was a attempt to go higher, a test at the EMA once again, and another bullish bar, a form of a two-legged pullback, which if we were going to look at shorter time frames, we can see that there is a clear two-legged pullback, but in this case, because this bar is engulfing, you can take that trade, and it worked out once again. Now in this case, we see that we had a break and a new high, but the trend is continuing, so we can start to widen the trend channel, and we see that we have several touches on this lower trend channel, and right here we have another test at the EMA, another two-legged pullback, first leg down right here, then the next bar broke above it, another leg down, nice bullish bar, go along right there, and it worked out once again before resuming the trend again and again. So now we had a break and a new high as discussed before. So we don't want to be looking for any more long setups until we have a proven continuation of the trend and we have this congestion before we started pushing lower and lower. So now we can look for two-legged pullbacks in the short direction. And I see one right there. We have a new low right here. We have one pullback. We have another pullback, a very bearish bar at the EMA. If you go short right there, it would have been an excellent trade yet again. Let's see if we can spot any more. And this is all in one day's price action. If you're doing this day after day after day and just waiting for these high probability setups to occur, you can just imagine how much money you can really make in these markets. Only trading this one setup. We see there's even another form of a two-legged pullback right here. One pullback, another pullback. This bar isn't the best, but it still would have worked out for a 1-point scalp. It would have worked out for actually a 2-point scalp even, but it just goes to show that this high probability setup works even when the bars are looking a little congested, but we're still looking for a test at this low of this trend within the wider trend as well. So when we keep pushing lower and lower, we see we have another two-legged pullback right there. One leg up, a break, new low, another leg up, bearish signal bar at the EMA. It would have worked out again. And I think you guys get the point. We even see another one right here. One pullback, second pullback. Once we have a break and a new low of this trend, we start a reversal. That can either be like this or something like this. We have a break, one pullback, first entry long, another pullback, second entry long, very nice signal bar at the EMA, and you would have caught that nice move. That's going to wrap up the video, guys. I hope you guys learned some things. Drop a comment, drop a like. Let me know what you guys think. Peace out.